Also, the government has launched a new investment fund that links public cash with next-generation industries, and demand on this day one of the launch was overwhelming, to say the least. Our economics correspondent Kim Jun-hong explains.
A government-backed investment fund offering tax incentives and partial loss protection opened to the public on Friday. The so-called Public Participation Fund gathers investors from the public and distributes them across multiple fund managers. The fund saw overwhelming demand on its first day of sales, with online allocations at major banks and brokerage firms selling out within 10 minutes. Branch offices also saw a rush of subscriptions, with firms expecting remaining allocations to be snapped up quickly. The strong response was seen as being fueled by tax incentives and the chance for ordinary investors to join a policy-driven fund. The program comprises 600 billion won, or approximately $395 million raised from the public, and 120 billion won from state funding. Subscriptions will remain open for 3 weeks through June 11th at banks and brokerages on a first-come, first-served basis. Investors are offered government-backed protection covering up to 20% of losses, along with tax deductions of up to 18 million won. However, only one-time investments are allowed, with funds locked in for 5 years. The initiative is part of the National Growth Fund launched last year to foster future industries. Its feeder funds are set to invest in sectors such as AI, biotech, and semiconductors, industries heavily represented on Korea's tech-focused Gov't-backed market. Enthusiasm over the fund appeared to spill over into the junior bourse on Friday, with the Gov't-backed closing up 4.99%. The market also triggered a buy-side sidecar early in the session after its 150 futures index jumped more than 6% in intraday trading.
Anticipation of fresh funds flowing into Gov't-backed sectors such as chips, robotics, and biotech appears to be boosting investor sentiment. The expected inflow is also seen as supportive for market liquidity.
Yet caution remains against excessive expectations, with actual growth and performance from the fund-backed companies needing monitoring. Kim Jun-hong, Arirang News.